a little bit of time to do a fireside chat with Jesper from Northstake, Pat from Pier Two, Stephen from RockSolid, and Tex from ETH Strategy to dive into a little bit more detail about their respective products and learn a little bit more about how like stVaults are helping them to devise these end user product experiences. Welcome, guys.
Izzy, thanks for having us.
Thank you. All right. In terms of intros, I think we basically got to know everybody here except Tex. So Tex, maybe tell us a little about yourself and about ETH Strategy. What are you guys up to?
Hey, thanks for having us, Izzy. ETH Strategy is the first on-chain DApp live on Ethereum mainnet. We have about 10,000 ETH in our treasury, and we're super excited to get started with Lido V3.
Awesome. So you guys were actually like some of the first guys to deposit into a live stVault. What made you interested in it? What kind of benefits do you see? Kind of tell us the perspective that you're seeing from the demand from the user side.
Yeah. So to date, we've deposited ETH across several different LST providers, including stETH, and really great collaboration with Lido so far. And with Lido V3, what it allows us to do is actually work with our validator operators with Pier Two, and RockSolid has built a really amazing product with the looped stETH vault. We've seen other implementations of it over the years and really excited for this particular one because of the underlying tech and the ability to actually work with our designated validators with Pier Two.
Awesome. So beyond kind of, just like leverage staking and the yield that comes from that, what other kind of DeFi strategies are you guys exploring from an stVaults and staking powered strategies perspective?
Yeah, we've mostly been deployed to staking strategies. We have some lending markets going on. We have an upcoming product that allows people to borrow the underlying ETH and stETH against their strat holdings. And for ETH Strategy, strat is our token. It allows you to get smart leverage on ETH. And, we always tell people to stack strats. So those are the type of DeFi products that we've deposited to thus far. But I think Lido V3 really unlocks, a whole new frontier of operations for us with our staking strategy.
Awesome. Super excited to basically see all those different strategies unfold. Stack strat. Very like nice little catchphrase. All right. Yeah. Let's move on to Northstake. So Jesper, you told us a little bit earlier about the staking vault manager that basically allows somebody to manage multiple vaults and potentially distribute stake across multiple node operators while still benefiting from the unique properties of stETH like liquidity. Tell us a little bit more about how you're thinking about creating like a platform that essentially wraps stVaults.
Yeah, thank you so much for that question. You see, we're coming from building institutional staking solutions, and I think we see sort of two distinct cases. One is which where you have a qualified custodian that needs to sign off on everything and help you safekeep and manage your assets. And the other one is a more nimble one where if you're a digital asset treasury company or a hedge fund type, you have more options in terms of how you manage your ETH. But one thing they do share and have in common is that if you are directly long ETH, then you would be foregoing the staking yield if you're not long staked ETH, i.e. you are staking natively staking your Ethereum. And this obviously introduces a liquidity problem that we know and the duration risk that exists. And for one segment of institutional investors, that's a liquidity issue, right? If I have redemptions in my fund, how do I manage a liquidity? The other one is actually even more interesting, which is if I'm directionally long ETH and I, for instance, in a DETCO need to outperform spot ETH or staked ETH, how do I do that? I do that by taking my assets and making them sweat. One way to do that is by engaging into DeFi, other type strategies that allows you to generate above staking yield return. Now, that is pretty you can say the best solution to actually do that, if you think just purely from an unit economics perspective, is actually to use stVaults, because the access to liquidity and the composability of wrap staked ETH allows you to take out leverage against your stake position in a much easier way at a considerably lower cost than your alternatives, and it allows you to engage directly. So those are sort of our view on this, and what we work on with Northstake and with the launch of the Staking Vault Manager is to reduce and minimize the cost of integration, right? How can I get started with stVaults? What sort of capabilities can I get? And simply trying to lower that integration cost as much as possible, which is why we offer a UI and API that is easily leveraged by institutional stakers, but also just node operators or custodians. So that's sort of what we set about doing with the Staking Vault Manager.
Got it. So yeah, you mentioned integrations and the importance of integrations, and also minimizing complexity and cost from that perspective. How have you thought about balancing customizability of what end users might want with robust compliance requirements and reporting requirements that institutions really kind of need at scale?
Yeah, I mean, what we hear from the partners and clients that we work with is that the custodian can actually act as a roadblock for the innovation and the product development that they ideally would like. So if I want to put out a new product, I have to figure out whether my custodian can support this, not only just from a protocol or a product perspective, but also from a risk and compliance perspective, and that can be a barrier, or at least it can severely impact the time to market for these types of products. And I think what we've learned over the years is that it's the orchestration and it's the capabilities that you need in order to manage stake at this level that we're talking about now, which is an issue for custodians. Now, if you start to create architectures where you have a more modular build, that allows custodians to focus on safekeeping of assets, signing off on transactions that they understand and that they can verify. For institutional stakers, whether that's asset managers or digital asset treasury companies, to work on the compliance aspects related to the reporting requirements from the local regulators of the markets or the jurisdictions that they work in, while someone like Northstake and Pier Two, for instance, as the underlying validator, are able to provision their services in a way that allows for a greater flexibility on how to create and get products to market, and B, for custodians to make sure that they can safekeep assets as intended. So we see this new paradigm of stVaults as being, I think, the right product at the right time for institutional stakers.
Speaking of the right time, there's obviously no way to do everything all at once. And I recall from your presentation that you basically kind of had like a milestone-based roadmap around how you're thinking about the development and opening up of the product. So over the next 12 months, can you tell us a little bit about how you're thinking about this phased approach? What kinds of interactions are you seeing, whether it's from like the custodial integration perspective or working with other node operators and basically opening up the platform?
Yeah. So today, node operators can sign up. All we require is a validator endpoint and the node operator ID as an ID'd operator on Lido V3. Then you're good to go on the UI. What we would ideally like is be able to open up the Staking Vault Manager for all node operators and for all users to leverage. Secondly, we want to build composable modules that expand on the strategies that we see with the DeFi wrappers, but where you can also do pooling and looping, but maybe even delta neutral strategies as well. I know that a lot is given to us out of the box from Lido and with the DeFi module, but we want to expand on that. And I think thirdly, which has been a build for us for some time, is being able to natively stake as an asset manager and leverage the liquidity of stETH, but without necessarily holding stETH, because that is, I think, sort of a critical requirement if you want to accelerate the adoption of stVaults with the largest digital asset managers in the world, that they don't need to refile in their funds, but they can simply use a solution that allows them to transact liquid ETH or staked ETH with a counterparty who can then mint stETH and unwind the position immediately. So that type of liquidity module is something that we've already designed, and we'll commence build as soon as we see a bit of demand on that. So that's what the next 12 months look like for us in terms of roadmap. And yeah, as with everyone else on the call, we're very excited about it, and we'll love to share the access to stVaults as much as we can.
That's super exciting. And I really like, especially how, like, in the end you were talking about how this functionality of stVaults to basically assign roles and responsibilities of different things to different actors enables you to come up with these kinds of mechanisms around liquidity and redemption. So you don't have to rely on a kind of like rigid approach where, you know, there's only one actor or two actors that can interact with the vault. You can sub-segment all of these different activities or responsibilities to different actors. And so you can come up with legal setups that essentially allow DeFi products to work in like a more traditional corporate finance kind of paradigm. And so, yeah, it's been complicated to build something like that. And building a platform on top of a platform is even more complicated. So huge props to you for undertaking that effort.
Thank you so much. All
right. And so, yeah, we started with techs in ETH Strategy, who have basically performed an allocation into the Pier Two and RockSolid DeFi Vault. And so I'll go to Patrick and Stephen and ask a few more questions, and then maybe we can have some open-ended questions to the entire panel. So you guys are basically creating a product together. Can you tell us a little bit about how like this collaboration came about and what your experience has been building on top of stVaults as a platform and as architecture?
Definitely. Yeah, so in terms of the partnership and relationship, when Pier Two is out in the market talking to its clients, its exchanges, its funds, we've got an existing validator relationship. And I guess it was a really great chart that was pulled up by Martin before. On the Kiln side was the stETH, or the Ethereum staking reward rate is definitely trending in a downward direction. So a lot of our existing customers are looking at and exploring different options of tapping into DeFi and how they can possibly look at accessing a high yield. So the RockSolid relationship came about in a very, very natural way. We sort of clicked very well with Steve and Ben, the two co-founders there at RockSolid. Maybe it is the nationality. I dare say that that's probably a good part of it. But yeah, in terms of the relationship so far and just some of the conversations we've had with other vault technology providers and vault providers, Steve and Ben have been expert. Their approach to risk management, I think, and how they're looking at approaching the infrastructure of the vault, which Steve will be a lot more experienced to go into than I am, but they're doing a very good job. So I'm really excited to sort of run the validator infrastructure that powers that vault. It offers our customers that are used to the SOC 2 Type 2 NORS certified infrastructure that we've been running for their validators for a long time now. We're utilizing the battle-tested validator infrastructure of Pier Two, the battle-tested Lido smart contract technology, the longest standing protocol supporting liquid staking for ETH in the ecosystem at a large scale. And then accompanying that with the RockSolid technology, it's really an unbeatable product, I think. So yeah, really, really excited to launch that and leverage the benefits of V3 alongside that.
Yeah, and yeah, I agree. Yeah, it sort of came together naturally. I think like we've seen from the presentations, right? There are a lot of pieces that go together here, and Pier Two are the staking experts. We, even before we met Pat, we're admirers of Rated .network, and always like to see who's up the top there. And Pier Two are kind of camped out, so there was a natural fit there. But yeah, they're the staking experts, and we're the vault experts. And so we're able to really combine, which is the two things work for the stVaults, right? And so we're able to combine that. I think given that like this product too is focused at institutional depositors, you need to be able to explain and sell it to institutional depositors. And that was something that, Pier Two have built really amazing relationships with, the biggest of crypto and outside of crypto. And we at RockSolid, like we're deep in vaults, deep in DeFi, deep in technology, but we actually do come from a traditional finance background as well. So we're able to really jointly bring this product to market. And as you saw from all those architecture diagrams, there's a lot happening. And so being able to both reassure depositors on the sort of credentials of the company, of the individuals, of our approach to risk, but then also just honestly like run a sales process. I mean, like Tex, you guys are an on-chain fund, so you're not what's the right word? It wasn't a fully enterprise sales process, even though you went quite deep on the risk aspects of the DeFi stuff. But you need to be able to do that, and that's one thing I think we're all finding out in crypto, whether you entered the space to be an enterprise salesperson or not. You now are, and so yeah, that's sort of how the collaboration got started, and I think how it sort of has started to bear fruit. In terms of building on stVaults, yeah, great experience so far. I think you guys did a great job of documenting the product. We were supported on Telegram. Code's well structured. Like it was easy to figure out what was actually happening. And so yeah, so far we've kind of been able to use it to do what it says on the tin, and direct the stake where we want it to go, and mint stETH against it. So yeah, it's been great.
That's good. It's good when like relatively complex things are still good at doing like the simple thing that they should do underneath, and don't kind of like overcomplicate it. So
Yeah.
let's kind of go to like some general questions. I think Stephen, you brought up like a very interesting point, which is we're all kind of turning into enterprise salespeople. So it's definitely not what I thought about being when I was growing up. But there are different kind of like customers, right? So Tex, you're with strategy. You guys are looking more at from a DeFi angle, from a smart contract perspective, from a DeFi risks perspective. You're thinking about how do the risks stack. But from an enterprise perspective, there's a challenge to onboard potential users, right? So how do you communicate these risks? How do you communicate how rewards work, how the strategies work, and how do you kind of like go about building up confidence in the audience that you're targeting your products to now? And I guess like anybody, feel free to answer this question from your specific product or approach.
Yeah, I think whether we like it or not, everybody in crypto now is kind of an enterprise salesperson. But, honestly, I think one of the most interesting aspects in DeFi right now is, Steve spoke a little bit about our risk analysis that we looked at. And honestly, one of the biggest parts, since we're in financial markets, is liquidity. And so I think probably one of the largest selling points for the vault itself is actually Lido stETH's deep liquidity in DeFi. And I think that has not only been a network effect for liquid staking tokens in general, but also kind of an enduring benefit of products built on top of it. And so the vault architecture that RockSolid has built is, forgive the pun, but it's rock solid. The ERC 7540 standard is something, hugely interested in. We've looked at building this particular product out in-house for one of ETH Strategy's products, our perpetual note ESPN product. But honestly, talking with Steve about it and the underlying tech has been really amazing, really impressed by what they're building. And I think that when we're actually looking at selling this, not only to on-chain degens, but off-chain funds, and looking at the enterprise approach, really the entire stack here is quite impressive. And leveraging Lido's deep liquidity on-chain is just such a huge benefit when we're looking at selling into these markets.
Yeah. I think another thing that comes up too is like, we in crypto, especially in technology, can get excited about the technology, right? But the buyer cares about what the problem is. And native staking solved the problem of I want yield on my assets, right? But I need to do it in a compliant way, and I need to be able to choose my node operator, right? And so now we can speak in terms of, well, we can help with the solution to your problems, because when you needed to go from 0 to 3% staking, and now you need to go from 3 to 6%, it's like we can help you with that, right? And we can help you within a way that you're still able to satisfy your compliance requirements, because you can still control the stake. And so when you start the conversation from like, we're going to help you with your business before you get into the minutia, like that obviously just puts things, that's a good start, and something that can get clouded, I think, in DeFi sometimes.
Mm-hmm. But what kind of spanner does the entry queue throw in the works in a conversation like that?
Well, I mean, it comes up, right? But I mean, when we look at it, like leverage staking has been a profitable strategy over a number of years, but it's not the same APR every day and every month. It goes up and down, and the queue is part of that, right? And so it's annoying timing, I'd say, that like as you guys would appreciate, that it blew out right for the launch of stVaults. But that's the nature of the beast, and so that's where, like, when Tex and ETH Strat were doing their due diligence, like that was one of the things we went through. And yeah, so there will be periods of lower returns, there'll be periods of higher returns, but over time, it's proven to be a reliable strategy and a great sort of entry point for DeFi, right? When you want to move from pure staking to some leverage staking returns.
I think that to that question, actually, I think that being able to orchestrate validators becomes increasingly important. Yes, the entry queue now is high, but it's sort of a transient thing where it goes up and down. If you want to manage these things longer term, you need to think about a setup where you're able to orchestrate your staking in a way where you have validators on chain, and you can deposit into them, adding stake, but you can also withdraw from them, taking stake away. You can mint against them. So it sort of calls for more mature and to some extent more complex staking setup, depending on who you are and what you're trying to achieve. So I definitely think we'll see that play out to a much greater extent that we've seen so far. And to the second point, from an institutional adoption point of view, I know that Lido is by far the most liquid LST out there. It works tremendously well in DeFi, but when we start to talk about real institutional adoption, we actually need to see more liquidity. And I think stVaults is actually a great way to provision that liquidity, because you can have counterparties on the other side receiving a newly minted STEs, so that the core protocol itself becomes almost like a liquidity sleeve that you can rely on. However, you sort of build liquidity in layers where you have bilateral agreements with your market makers to take STEs and hold STEs. So there's a lot of, I think, builds that we still need to see from an ecosystem perspective in order to serve the largest institutions in the world. But I do believe that that Lido is uniquely positioned to capture that. Simply because it's already the size of the protocol and how composable it is. So yeah.
Yeah, thanks for that note. And yeah, we're nearing up on time, but I think that phrase is really kind of like key to this whole discussion and key to how we thought about like building this platform as a product, essentially, like liquidity within layers. So whether you're talking about DeFi yield, and that you're doing like leverage staking, or you're thinking about volumes in order to drive yield, or you're thinking about how to make products appealing to institutional customers or users that are a little bit more exacting in terms of the requirements or expectations that they have. Liquidity and the kind of like feedback cycles that drive liquidity are some of the most important things. So yeah, with that, and a comment from the Lido Finance account on YouTube that says, when Lido V4, yeah, I don't know. We need to bear with the entry queue first. We need to make sure stVaults are a success, and then we'll definitely have a look at V4. Maybe we'll have Pier Two on again. They can tell us a little bit about Lantern and post-quantum staking on Ethereum and what that'll look like. But yeah, huge thanks to everybody for coming on today, for telling us about all the work that you're doing on top of Lido V3 and stVaults, the products that you're building for your users, and helping support this ecosystem and make the launch of V3 a success.